the Fed it has a fine line to walk here. I mean, 5% unemployment, who would have thought? That seems so good. But then we know how many jobs are still either unfilled or that we still lost. So they truly have a dual mandate. They got to worry about the inflation, but they also still have to worry about full employment. We'll see tomorrow how it's going. But do you think they're doing a pretty good job, or do you have advice on how they should modify things?
Well, first, I do think they're doing a very good job. Secondly, I do think, as you point out, the situation is complex. And so, yes, they have a dual mandate. We have indeed seen unemployment come down. At the same time, surveys show that perhaps as many as 2 million Americans have left the labor force permanently, perhaps. So we have something that's being dubbed sort of the Great Resignation. And we also see that labor force participation is down. And so particularly among women and minorities. So I think the challenge around the unemployment picture or the labor market picture is more complex than just the headline number. Okay. Similarly, on the other side of the balance of the dual mandate, as you point out, inflation has been running pretty high. And there's a big debate as to what that's permanent or transitory or somewhere in between. I think most CEOs expect to see inflation come down over a period of time, but how quickly and how much? Not yet known.
Were you a monetarist? Do you ascribe anything to money supply growth or M2 growth that can just flood the system and actually cause a devaluation or inflation, devaluation of the currency? Someone pointed out to me that we're still running much higher. I mean, pandemic level M2 growth was 20%. It's come down. It's 13%. But that's still a lot. But why isn't the dollar weaker, given that? Maybe you needed that. The demand was down during the pandemic. Maybe you needed it.
Well, look, there's no doubt that currency markets reflect a number of things, but importantly, I think they reflect a sense of relative strength of economic outcomes. And I believe, in part, what the dollar is telling us is that global markets still expect the U.S., for the various challenges that we have, to come through reasonably well. And maintain growth. And in fact, we started talking about the CEO confidence survey, recognize even though it is down somewhat, it's still very much in positive territory. Any reading above 50 is positive, and the readings are in the 60, 70% range for the CEO survey, even though it's come down. So I think what the currency markets are telling us, similar to the survey, is still a general sense of optimism around the U.S. economy prospects, current and near-term future, but not quite as optimistic as perhaps a little earlier.
What is the risk in inflation? Is it that we're underestimating it, given what we were just talking about? I mean, do you worry about money supply growth? Do you worry about energy prices? Do you worry about wage pressures, given trying to bring people back into these jobs, and people aren't biting yet at certain levels of wages?
So the answer is, yeah, one should worry about all of those questions. I heard Steve's very good analysis of how energy markets have changed a little bit, and now we find that the U.S. is the largest producer of energy and has achieved self-sufficiency. So we worry about that slightly differently than we used to, and it may well be, as Steve suggested, that feeds into inflationary pressures. With respect to wages and job markets, we have seen in our CEO survey that a majority, around 55% of CEOs, are now saying across their companies it is very difficult to fill jobs. That's up quite significantly from the survey for the second quarter. And so we see that. We also see in the survey that around 60% of the CEOs say they expect to be raising wages by numbers that may approximate 3%, which is pretty high in order to bring individuals back. So we should watch the wage front closely. Now, my friends would be quick to say that, a tightening labor market and increasing wages is probably a good thing for many people who have been left out and to bring people back in. So, yes, we should watch that. And then inflation in general and supply chain issues, they are creating some real problems, both domestically and internationally. I think I saw a report this morning suggesting supply chain challenges in Germany may be slowing that economy somewhat, and certainly creating some challenges for all CEOs. So all of these things are in the mix. And I think they all explain a little bit, maybe quite a bit, of why it is that the general level of confidence, while still positive, has come down somewhat.